Namaskar and good evening, traders. We are on the evening of 29th of Jan. It's a Sunday evening. Tomorrow the market's going to open, and I think it will be an interesting and important week ahead, keeping in mind what we went through last week. So let's take a look at the markets. My usual approach of three screens here: weekly, daily, and the 75-minute time frame. We'll take a look at the Nifty, Bank Nifty, few sectors. Well, the first thing is I think we should focus on the weekly time frame. What we have is finally the breakdown of this particular consolidation. Now I would like to blow out the weekly chart and spend some time, because I have some Fibonacci projections and retracements drawn on this chart, based on which we can derive some anticipated levels. So what I have on my chart over here is a retracement from this low to this high. I have a retracement from this low to this high. And then I have drawn a projection of this leg down, considering this as a bounce back and projecting further on the downside. With these in mind, I have a cluster in this area where the Fibonacci levels are more or less close to each other. I have a brilliant cluster over here of one projection. I have a brilliant cluster here with two retracements, cluster of retracements, and then further down not much of a cluster happening, confluence happening. So talk about the first one. The first cluster over here is 17,500 to 17,600, and the Nifty near month futures last week made a low of 17,576. So it's more or less there. Keeping in mind the way it sold off, the momentum with which it sold off, will this hold? It's difficult to say. A more likely target, if the momentum continues, is somewhere here. I personally have a lot of respect for the 76.4 and 78.6 retracements, though they stand alone. But this particular cluster is 17,100, and these guys are around 17,236, 285, so 17,250. So if we see a follow-through movement on the downside with follow-through momentum, then I don't think this support will hold at all. Or this is not a support, it's an anticipated support. This confluence of Fibonacci levels may not hold at all. In that case, I think 17,100 to 17,300, this 200-point range is where we can expect some kind of a support build-up or soft landing, etc. That's a bad case scenario. Not the worst case scenario, but a bad case scenario. The good case scenario is, let's say, if it starts to face some support here in this area and then manages a short-term bounce back. If it manages a short-term bounce back, there's no doubt whatsoever that this breakout level is going to act as the immediate resistance. Now, classic technical analysis, if we get the bounce back, if we get this resistance, then this level is for sure, there's no second thoughts. Because generally I have noticed when we get the breakdown and if we get a throwback, if the throwback does not reverse the trend, if this does not happen, on the other hand, this opens up, then it easily will open up this much distance on the downside, easily. So in that case, 17,100 or 17K will not be a problem at all. So we'll keep this in mind. The sad part of it is it was holding pretty well close to its previous highs, and now it kind of has opened up in a zigzag ABC kind of a manner, which raises probability of further downsides. And the weekly chart is now slipped into a downtrend, which is not a good sign. The index across all three time frames are in a downtrend. So strategically, if you are a long only trader investor, this is not your time right now. If you're a long only investor, I will still suggest take a little bit of further time, do some better homework, and start buying at staggered levels. Stocks like maybe ICICI Bank or Reliance, you might love at these prices, but in a staggered manner, please. We're not too sure, right, whether we will get a bottom anytime soon or not. If you're a trader who has no bias and can take long trades as well as short trades, then for taking short positions, I think that a small bounce back will be a better approach. Now this is the daily chart, and now we can see this is the breakdown. These are the levels from where it has broken down. It's not too far off. So a short-term bounce back should not be completely ignored. By the way, right on top over here, we have beautiful resistances. So any move on the upside, I think will face multiple resistances. And I'm not too sure if I've shared this in my earlier videos, though last week I was not that regular in terms of sharing my thoughts, views, but the upsides are likely to be likely to face multiple resistances, so it may not be smooth. But if the market opens up on the downside, the follow-through movement on the downside is likely to be more smoother, or in other words, the selling is likely to be backed by better momentum, right? So levels on the upside, please keep in mind that it's around 17,830, 850. This is the zone. This is the area where the short-term resistances lie. As I'm making this video, I think SGX was up just 30 points, so nothing much in it. US markets held well. I'll quickly take a look at the globe. So 17,700, a little above that 17,700, 30 points positive reading from the SGX. We'll see what are on our cards tomorrow morning. But considering the 75-minute time frame, considering the way the prices are stretched away from its averages, a reversion to mean should not be completely discounted. But the trend and the momentum has clearly opened up on the downside. Bank Nifty. Bank Nifty fell very sharp, and clearly the Bank Nifty over here also have opened up in a multi-legged correction. I have drawn similar retracements and projections for the Bank Nifty, and over here I have a pretty good fit at 40k, very close to 40k, which is, I don't think, should be a problem at all. I don't think so. Now this leg of Bank Nifty, let's consider this leg, this as a consolidation, and then the next opening leg. This leg and this leg is more or less very, very similar in size. So is Bank Nifty closer to its supports in relation to Nifty? Maybe, I don't know. But keeping in mind the way it sold off, the levels that I would like to keep in mind is the psychological 40k mark. After that, I don't have any pretty confluence of it, at least on the chart of Bank Nifty, right? So I'll take one at a time. So I'll consider 40k first. And then I have that 76 and 78.6 confluence, not exactly confluence, very close to each other, which is at these levels. We have got highs and past some resistances there. So we'll take it step by step. But the first one is definitely 40k. Can we get a bounce back and then 40k? I think that is more likely to be the case. And the resistances, the serious resistances for Bank Nifty is way ahead, is way upward from the current price. So some kind of a reversion to mean and then probability of opening up on the downside towards 40k is more likely to be the case. Now whether it will continue to trend beautifully, that is a bounce back, then beautiful fall on the downside, I don't know. We can get into some kind of a frustrating range bound activity also, because we already have a breakout trap. This was a trap, and a beautiful 2-day trending move. Post such moves where range indicators expand beyond 2 standard deviation, generally prices slow down. In this case, the selling should slow down, which means market can go range bound and just take some kind of a breather. But trend, momentum, strategy, direction, bias is all on the downside. I would not suggest you to go long at this juncture right now, right? Amongst these sectors, it is CNX Auto thanks to Tata Motors, which is holding exceptionally well. And it's primarily because of that particular stock. So one should continue to keep a bullish bias or not a bearish bias, I would say. Try not to short these stocks, at least the four-wheelers from this pack. So I've marked it green. IT is another one which can act as a savior. There's a possibility. I have a nice trend shaping up. The structure is in place. The momentum is also there. The index has slowed down for last 2 weeks. Considering the other sectors, it's not that bad. And so if some sector or few large cap stocks come and try to save the Nifty, I think we should keep an eye on stocks like Infosys, TCS, HCL Tech, etc. The CNX PSU was one which gave a beautiful breakout, and this particular move came primarily because of Coal India, but then it has kind of slipped very hard. It's still in a positive zone now. The structure has not completely reversed. The important thing would be to see that whether it gives a bounce back and then the fall or not. So I might rather take it off and keep it under observation. PSU Bank, negative, big time. Private Bank, huge range expansion on the downside. Pharma, now huge volatility we've seen recently in few of these names. Dr. Reddy, Cipla, very difficult to take a trade, especially from a short-term point of view. But having said this, CNX Pharma on Friday did not break the Wednesday's low. And so if you get a break below this, a fall through sell-off is very, very likely in pharma. Weekly is clearly in a downtrend. Momentum is clearly on the downside. So all it needs to do is just break below that. So keep an eye on something like a Sun Pharma, Dr. Reddy. The only problem in this particular pack in taking this kind of a trade, we need to give enough space. The stop loss should be wide enough considering the volatility that we have seen. Now, FII numbers were hugely negative, DII numbers were hugely positive, so big deal over there. But still, we'll take a look at it. Close to 6,000 crores of cash market provisional number coming in from the FII selling. DII, of course, has been supporting that kind of a sell-off by continuous buying. If we take a look at the sectoral behavior last week, if I sort it out, then you can see CNX Auto is the one which was the gainer. Now, to a huge extent, it was primarily because of one stock. And then you have amongst the losers, it's the PSU Bank, Energy, etc. Important thing is rather not looking at these percentage fall, but what I will do is I'll come to the chart of Nifty. Okay, and I will see where was the high. The high was made here. Since then, we have gone through 1, 2, 3, 4, 5, 6, 7, 8. It's been 8 weeks since then. So over here, the tail length, I'm going to drag it and take it to 6, 7, 8. And now I'll sort it in terms of tail. Okay, let's first sort it in terms of percentage change. We can see media, which is anyways in a lagging sector. We can see real estate, which is anyways in a lagging sector. So that's fine, not a problem. Energy, primarily because of Reliance, which is still in an improving quadrant, is showing some strength. So one should keep an eye on the other non-Reliance stocks, maybe the oil marketing companies. I think CNX Energy considers Coal India also. So some bit of this improving quadrant that you see here is probably because of few stocks like maybe like ONGC or Coal India. So we need to take a micro look at the sectoral constituents. Then we have the small cap. Then we have oil and gas, and we have the PSU Bank. So remember, the PSU Bank had a huge stretch of outperformance, huge. They were right up there. And what we are going through right now is a drop of momentum of the relative strength. Most of these charts have, thanks to this sell-off, has moved into a short-term downtrend. But I'm quite sure they're going to give us a short-term bounce back also. And so it will take some time for these stocks like SBI and Bank of Baroda, PNB, to move into the weakening or the lagging. But still, I think one should not be bullish on them right now, by no means. If I sort in terms of tail, you see PSU Bank is there, metal is there, oil and gas, mid cap and Nifty is there. Now this is RRG in terms of CNX 500, that's why Nifty has come. Now, not too sure, especially when it comes to metal, I can see that the metal is cooling off like this. So whether it's going to sell off. So not very confident about these names. Let's take a look at the improving where we spoke about energy. Pharma is make or break. We just discussed this. So it's from here, it's either going to find some strength and go up, or definitely it can open up on the downside. IoT, this is the one. So this is the one because it has been spending quite a bit of a time in the improving quadrant. And now it's just about to pick up. If you see, it's just about to pick up the momentum. So this is the sector which can matter if the index wants to bounce back. Not too sure about FMCG or the consumption pack because they've been underperforming. And down here we have media, we have, as I said, consumption, real estate is down here. Auto is here. Surprisingly, you can see it's the momentum which is picking up. And that's why I wouldn't suggest to go overly bullish, neither bearish. Let the charts reverse. So if I spend a bit of more time with the auto names, let's take a look at the two-wheelers. So Hero Motoko, nothing. Let's first take a look at the weekly charts and daily, both of them together. It's nothing much, just a sell-off, but it's not a downtrending. The structure is still flat. Amongst the two-wheelers, I have Bajaj Auto and Eicher. So Bajaj Auto, huge gap up, so that supported the index significantly. Eicher is in a downtrend, but not very strong. The momentum is picking up. Structure is not very well defined. So the conviction doesn't come. Tata Motors, weightage is definitely there. Big move on the upside, big gap up. So difficult to trade, but yes, any kind of a pullback can be attempted. Now the other two that remains, M&M, same story. Structure is positive, but the momentum is slipping. And finally, Maruti. Now this guy can be one that can take it up from Tata Motors going forward. One, the trend has improved. The momentum is still intact. It has gone through a bit of a volatile move and correction and bearish engulfing and all that, which means that it should kind of, if it consolidates close to 8600, the next leg should be interesting enough to be traded. So that's why you should keep an eye on the auto. None of them stand out. The ones which had to move has given a huge move. So we'll keep an eye on them. And then we have down here the healthcare, as I said, healthcare, pharma, many overlapping stocks are in a situation where it's a make or break for the pack. So overall, if I sum it up, lot of uncertainty, right? The trigger which has led to this sell-off, but the sell-off is very, very evident. You had a trap here when the market moved about 18,200 just to trap the late bulls, and it never looked back. The extent of the sell-off has been extreme. So I feel, looking at the weekly charts, gives me a feeling that probably the market is not done yet and we might get some fall through selling. So my suggestion, if you're a long investor, do your homework, pick some stocks. You can start adding them, ETFs or large cap stocks, in a staggered manner, 2 to 3 parts. Don't be in a hurry because there's enough scope to worsen from here. If you're short term, long only, please do not trade. Take a break, go out, come back after a couple of days. I don't think you'll miss something or anything. If you trade on both the directions of the market, as I said earlier, then wait a little bit. If you have short positions, then work on your stop loss, look at the charts carefully. If you're looking to initiate fresh shorts, then make sure that the markets begin to show you fresh sign of weakness selling. All depends what happens tomorrow morning, all depends how the market behaves. But whatever trades we take, high chance that we need to give our trades substantial space to breathe. Because of the range expansion, stop losses will be wide. All right, so if you're someone who does not like to trade with wider stop losses, just wait for a couple of days for the range to contract. All right, thank you. Take care of yourselves. Good night.